doesn't fit everything, but when it does, it's pretty neat. You know, it's a win-win. Truly, it is a win-win for everybody. You know, seller
Yes.
gets to sell at his price, gets to sell now. Buyer gets a property that probably cash flows from day one with 10% down. I mean, what else can you ask for from either party? So, yeah, it's just the seller just gets some of his money delayed. That's all that really,
Yeah.
truly happens. Otherwise, everybody benefits.
As I've shared over the last 6 to 8 weeks or so, I think the 2025 real estate market is just going to suck. It's going to suck for first-time home buyers. It's going to suck if you're selling a luxury home. It's just going to be bad. However, there is one silver lining. And depending on what side of the fence you're on, you may like it or not, but it is what it is. That silver lining is going to be for real estate investors who do the work, who write disrespectful offers, who follow up and get amazing deals from motivated sellers. We're going to have this conversation with the one and only Stephen Dow from Velocity Mortgage. How you doing, buddy?
I'm doing fantastic. And yourself?
Awesome. Let's get that marketing spiel out of the way so we can get into the crux of this conversation.
Again, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. So let's get it going.
Stephen, I've come to realize that 2025, when it goes down in the history books, is going to go down as a horrible real estate year. And you're going to measure that with transactions and this, that, the other. However, I know there are folks in my community, one rental at a time, that will get amazing deals because we only buy deals that cash flow day one. Right. We are willing and prodded and pushed to write disrespectful offers. And thanks to Velocity Mortgage, we have a lot of creative finance tools like the 50-40-10, which is something I leverage on almost all my offers. I write a cash price and I write a 50-40-10 price where the seller takes back 40% of the second. I just feel horrible for 2025 other than real estate investors. It's, we're going to do less than 4 million transactions. Right. First-time home buyers will be 20% of the market instead of 40.
Right.
And it's going to suck for everybody but us. So it's kind of, I don't know. I don't know how to feel about that.
Well, I mean, you start to hear some of these things that are trickling out about, the false jobs report reportings over the, I forgot which quarter. They were saying like 800,000 jobs were like fake.
818. Yeah. 818 disappeared.
Yeah. And so it's like, oh, so the jobs market is even, worse when we've got even higher inflation. And so that's going to, I think teeter up to, yeah, like you said, lower transactions, but desperate times too, as well, where, people have to sell. And so, yeah, with higher rates, people can't refi, especially if it's a short-term ARM or something like that. So, yeah, this time around, being I guess aggressive or gambling with an ARM, because maybe in the past you maybe got lucky with the timing, like you know what I mean. You got the ARM at the right time, and then when your loan matured, rates dipped. We're about the same. Oh, okay,
that's
I look
luck.
like a genius.
Ugh.
Yeah, I look like a genius. But then when it's like, oh no, the next time you got refi, oh no, rates just jumped up, and what do I got to do? When I could have taken this 30-year fix that was maybe a quarter higher at that time instead of the 5-year, But it's like, oh no, I'm smart. I know what I'm doing. Every 5 years I refi, and you sometimes roll the dice and
yeah, craps.
Yeah,
snake eyes. Yeah, you get crapped. You get crapped out. Yeah, it's you got to deal with the hand that you have, and yep. Again, the last 3 times the Fed has cut, rates have gone up. I don't know if you saw this, but on the daily financial news today, it looks like T. Rowe Price. And this is according to Bloomberg. T. Rowe Price is forecasting the 10-year note is going to 6%. 6. Can you imagine what happens to mortgage rates if the 10 years at 6?
Yeah. Well, I mean, that'll make our loan look really, really good. But yeah, I can imagine how that would impact us. I'm sure. Yeah, it would. I mean, with the move like that, but man, yeah, that would dry up a lot of business, obviously.
Yeah.
Yeah.
You remember the folks that said, marry the house, date the rate? Can you
Yeah.
imagine how that turns out? Oh my goodness.
Uh, yeah.
I'm
I
glad we
mean,
never said that. Never said
no, no, we definitely didn't do that. So we've been on a good roll this last couple of years.
that.
We've
Oh
been
yeah.
making pretty good calls, and I don't know if it was just good timing, like how we met each other, and then rates
No,
dropped, and then but this whole
we
like,
do this business. We really do this. We're not
yeah,
pretenders. We're looking at
right,
deals every day. We're helping people every day. And
right,
there's a couple of tenets. And I wrote about this in my book, One Rental at a Time.
hmm,
I never like taking 5-year ARMs. The only time I ever had one, it almost cost me to lose an apartment building,
right,
right? Because you just don't know what the future holds. The absolute shortest ARM I would ever take is a decade.
right,
And let's be honest, you would have to beat me up pretty good to take any ARM. Because of you. It's funny. I actually had somebody reach out to me yesterday saying, Michael, I don't know what you're doing. You can't get small multifamily with 30-year debt. I said, you're a moron.
yeah, you
You
can.
absolutely can.
I got
I've
two of
done
them.
it. Yeah, I've done it. And I could still do it tomorrow if I found the
Right,
right deal.
right,
Let me introduce you to my boy, Stephen Dow at Velocity Mortgage. Yeah, again, when I look out at 2025, I feel bad because I believe that homeownership is the path to wealth for most people.
agreed.
And in 2025, we're likely to do 20 to 25% first-time home buyer transactions. Historically, it's 40. So that's a huge miss. And it'll be the third year in a row of hard misses for that sector. So it's getting pressed. But as an investor, let's be honest. When do I want to buy? There are 2 times I want to buy. One, when there's no competition.
Right,
And 2, when I can get cash flow in the best deal possible. That's all 2025 is going to be. And then you throw on top of that the disaster that is small multifamily, 5 to 40 units with all this stupid syndication debt blowing up left, right, and center.
right,
There's going to be a lot of foreclosures and a lot of pain. And dude, I'm going to gorge like I'm at a buffet. It's going to be
right,
amazing.
right. No, I mean, that's where the real wealth is made, in those right, moves at the right time, and just, being prepared. And so,
It's knowing you have tools and it's discipline, it's
mhm,
consistency.
mhm,
The money's in the follow-up. That's what I think a lot of people get wrong. They hear me talk about disrespectful offers
right,
and they go, okay, I'm going to take a shot. They take a shot and they get told F you. And then they never do it again. The money is like most of my amazing deals were 3, 4, 5 follow-ups. That means months between my first disrespectful offer and them saying yes. Dude, this is a game. You got to find the seller who just gives up.
right,
You're their only savior.
right,
And then you get creative with, here's a cash price that's stupid low. But you know what? I have this 50-40-10 from Velocity Mortgage where, you could walk away with 60% of the cash today,
right.
and then you carry the other 40%. That product that we kind of beat up and call 50-40-10 is just so flexible and so awesome.
Now, it's been a game changer in a lot of different situations that they never thought that was an option, either from the buyer side or even from the seller side. Like, I've had one where it started off with just a regular loan that they submitted in. We couldn't find any comps. So my company said, well, we won't do it at the max, 70%. We'll do it at 50% LTV, but the buyer didn't have the other 50% to put down. But the seller at that point was like, hey, I'm willing to carry if that was an option. And so, yeah, we were the only lender that allowed it, because he had a couple of previous escrows that fell out because they couldn't find comps. I'm sure maybe 1 or 2 lender might have said, hey, we'll do it a lower LTV, but buyer didn't have the rest of it down. Even if the seller was willing to carry, he couldn't. So that one worked out. So it doesn't fit everything, but when it does, it's pretty neat. It's a win-win. Truly, it is a win-win for everybody. Seller gets to sell his price, gets to sell now. Buyer gets a property that probably cash flows from day one with 10% down. I mean, what else can you ask for from either party? So, it's just the seller just gets some of his money delayed. That's all that really, truly happens. Otherwise, everybody benefits. But just finding, like you said, the seller just either wants to give up or has enough equity and doesn't need all the proceeds from the sale of the property. that's the situation you kind of want to be in.
Yeah. Folks, we haven't talked about the 50, 40, 10. If you want us to talk about it, leave comments below.
Right.
Sometimes we feel like we talk about it all the time. Sometimes we feel like we don't talk about it enough. I do think it is a secret weapon for real estate investors. Let us know in the comments below if you want us to talk about it more. The other thing I think is going to become interesting, and again, something that Velocity offers that I don't know that others do, is sometimes called blanket, sometimes called portfolio loans.
Mm-hmm.
One of the things that will happen in 2025, in my opinion, is there will be some tired landlords that want out and they just want to sell it all at one time.
Right.
And in order to find a lender that'll do it, it's pretty hard. But I know Velocity plays in that space.
Oh yeah.
I assume you're still there, blankets and portfolios?
Oh yeah. We're probably one of the more aggressive lenders in that particular space, only because we'll go down to 50,000 per property as far as the minimum value or purchase price for each of the properties that are included in the portfolio or blanket. So, to my recollection, that's the lowest that I know of.
Oh yeah.
Not to gloat, because I mean that's just so many little guppies to work on.
Yeah.
To try to gather up, you know what I mean. So it's a lot of work, but yeah, we can play in that space for sure. And you can combine that portfolio aspect along with the 50, 40, 10, or the up to 90% CLTV.
Wow.
On top of the no ratio, loan, on top of the, can hold title. There's so many little kind of levers you can pull. So given the circumstance, we usually configure a pretty substantially beneficial strategy. You know what I mean? Just given some of the outlying circumstances. Because sometimes people are like, oh man, that I can't get a loan because of this or that. But it's like, well, actually you can. I just need to know a little bit more information, and then if there's certain things that the deal lacks, we usually can kind of make up for it with compensating factors. That's kind of the difference between us and a regular cookie cutter lender.
Yeah, again, being a make sense lender is such an awesome thing. Thank you for being on the channel all the time. The other thing you do that no other person do is you allow people to 30-year debt on apartments we talked about, but you can also quote unquote house hack a 6-plex, a 10-plex, or whatever it is, just like Arnold Schwarzenegger did way back in the day. You're still doing that, yeah?
Oh yeah, and again, I think I've been hearing a lot of house hacking a lot lately, a lot lately. But it's almost the same premise with the
bigger stuff, yeah.
Yeah, with apartment hacking, and now you don't have to share a bathroom with anybody. You know what I mean?
Yeah.
You can kind of have a little bit more privacy, but it's pretty much the same premise. And so the ability to do so, there's some advantage to that as well, because on an owner-occupied multifamily, we can allow loan amounts up to $750,000 and below do not require debt service or DSCR. So it makes it much easier to qualify when you're initially maybe acquiring a property that's maybe a little bit light in the rent. Maybe you come in, you stabilize the property, maybe put new carpet, paint, whatnot, and increase some of the rents. That might allow you to kind of later on take advantage of the property again, because with the no ratio loan, that allows you to get in because you won't have to qualify going DSCR. And then once you get in, restabilize, and then kind of take advantage of the higher rents at that point. So there's a lot of different things that you could do, especially from an owner-occupied multifamily standpoint. So, no ratio, you can hold title under an entity, 30-year fixed money. You can even have up to 10 years of interest only to give you a little bit of time, you know what I mean, to kind of get it, stabilized, new paint, new carpet, what have you, new tenants. And then when things kind of start cooking, you can kind of go back on fully amortized and rinse and repeat. Yeah. So there's a lot of little things we could do.
Yeah. The other thing I think, we talked about this a little off camera last week, that there's a big Wall Street buyer, probably the largest on the market, has just left the DSCR space.
Right.
Looks like their portfolio is getting burned because they were a little bit too aggressive. So there's a chance that DSCR loans become much harder to get, much more expensive, lower LTVs, because the big buyer is gone,
right?
And it looks like not coming back. So
I'm definitely seeing an uptick in business. I'm seeing a lot of requests to have appraisals transferred, from another lender, because that other lender's guidelines changed, or a lot of times they don't get into it just because it's kind of like, oh, hey, your second fiddle,
blah blah blah.
Yeah, my first choice, whatever, couldn't come
couldn't
through,
perform.
So, couldn't perform. Can you help me out now? Kind of thing. So they don't get into all that. It's just, hey, we need to transfer from this other lender, something, so whatever.
Yeah.
Um,
Yeah, I think you're going to see a lot of that because I think again, I've been watching DSCR loans the last 6 months or so, and the rates got to be almost conventional. Like there
right?
wasn't enough delta. It just became too aggressive. So they're gone. They got burnt. They're out. There's a few guppies left, but this is why velocity was always the right answer, right? Wall Street traded, make sense lender, do what you do and don't do what you don't do. You don't try to bend to the market. So shout out to your leadership.
Oh, agreed. Very, very fortunate to be led by a great management crew. They've been making some really good moves. Sometimes maybe not from our perspective at the time, like,
Right.
no,
It looks
don't
good
do
in
it.
hindsight.
Oh yeah, 2020 vision, hindsight. I mean, especially where we're sitting, stock prices as high as it's ever
Yeah.
been, and yeah, the future looks bright. I mean, I don't know what the future holds, coming up. I haven't heard much as far as, ramblings about anything, new, because we try to stay in our lane, we
Yeah,
do what we
exactly.
do.
And that's okay. There's
And we
nothing
do
wrong
it
with
very,
that.
very well. Yeah, we don't have to have like all this like new shiny, look at all this and all that, and, look at my new toy. That doesn't come up that often. Yeah, so we kind of stay in our lane, but we try to perfect what we do, and that's pretty much all it is. But yeah, I mean, I'm looking forward to 2025 because
It's going to
where
be
there's
fun.
pain, yeah, we usually find opportunity as far as
Yeah,
with our particular product.
2025, the year of the investor. I think Velocity Mortgage is going to be the gorilla in the space because all these pretenders who are leaning on Wall Street are now gone. And many of them are going to close their doors, right? There's a couple of people I talked to who are sending 90% of their business to that. They're done. They got loans they can't sell. They're going to have to take a loss, and that just destroys their warehouse line.
No, agreed. I mean, again, there's so much like ebb and flow with how rates are and things of that nature, to where sometimes lenders can kind of hold off for a little bit on a portfolio, something they can't sell. They'll sit in it for a little bit, and then when the winds change, okay, let me put it back on the market or stuff. But if they can't, and they either got to take a huge loss, and if they don't have the reserves to take that loss, close doors, because and it's happened a lot of times, more often than not. So we'll see.
Yeah. So, folks, if you want to know about how Velocity can help you, or you want a solid plan B because your plan A is getting a little shaky, they just email you, right, Mr. Siemandow?
Please. Yeah, that's usually the best. Again, right down there, sdow@velocitymortgage.com. In the subject line, please put the acronym ORaaT, just so you can make it past the firewall. In the body of the email, if you could please just brief description, what you're looking for, address would be super helpful. At least city and state to make sure I lend there. Your mid-FICO score, best phone number to reach you at, and typically 24, 40 hours I'll be in touch. I'm slowly starting to catch up with everybody. I apologize for the slight delayed response. I was actually on vacation. I know you probably saw a bunch of the normal videos because we pre-recorded some stuff,
ahead of time.
Yeah, so apologies. Yeah, I was out for almost a month, so I'm slowly starting to catch up with most people. I think there was an auto response that I think you should have gotten, but for some reason, some people either didn't notice it or whatnot. I did have a couple that were stuck in quarantine, so apologies for that. So again, I'm slowly catching up, but I'm back on track now. So if you're ready, I'm ready. Otherwise, if I don't get a chance to talk to everybody, have a great weekend.
All right, guys. Take care, man. Merry Christmas.
Thanks, Mike. You too, brother.